Welcome to Trading Lounge and the US indices report, and we'll be looking at the Nasdaq and the S&P, but because of the UK referendum we'll also be looking at the FTSE, the DAX and the cable, maybe a bank or so, because that's obviously where all the action is. The race regarding the polls of Remain or Leave are pretty close, slightly Remain as you know. Our wave counts are basically positive in terms of remaining in the EU, but that's a bit of a guessing game, so it's not worth being exposed to something that we're not 60 or 70% sure of, and also to the volatility and the gapping that can occur is something that you wouldn't want to get trapped in either. So for myself personally and for our UK trades and US trades on the equity CFD market, we will be at zero for those markets. Now for the Nasdaq here, we've been looking at this as wave 4 here, and up for wave 1 and a wave, a B wave, and the 61.8% retracement levels down here, but because we have 5 waves here, we can put wave C and wave 2 here, and that's what we've done on the S&P 500. But I'm not really convinced about this particular low in this regards in terms of patterns here. So from wave B down to wave C here for wave 2, and expecting it to move up from this area, and it's possible it's got all the right moves in it, it just hasn't moved. So we can look at this up for 1 and back for 2, up for 1, back for 2, and so on here for a move to the upside. But it's also possible to read it as an A and a B and a C correction, down for 1, back for 2 here, and then down for 3. We wouldn't want to miss a move either way. So we know that this is 5 waves here, so if this is a corrective continuation pattern, then you really need to be taking out the lows here. Don't go in early here, because technically the move up here, 61.8% retracement level, and it may even extend down a bit further as well to try and cover this gap, and you may get trapped. It would have to have a clear breach of these lows here for you to short, and it would be a worthwhile short. So it is something that you can put an order in to the markets, but also too in terms of results coming in and so forth. As you know, with headline news, that markets can spike one way and then go back the other way as well. So you just need to be so careful about this. Now, looking at the I'll go to the S&P 500 now, because we really want to sort of look at what's going on. Well, I've clicked the wrong button, but while we're here for the FTSE, the UKX here, from its wave 2 low here, we've been counting this up as 1 and 2 and 3 and 4 and 5. So we're looking for a top here at 63. I believe that top's in place, and would be looking for a 61.8% retracement level, which would be in this zone here for these markets. So I'll just pop that in there. So either way, with this particular market here, the FTSE and also the cable as well, the pound dollar, we are also looking at 5 waves up. So we're looking for a pullback in the indices here and also in the cable as well. Obviously, these are going to be the most volatile markets, but our wave counts would suggest that we have a 5 waves that's completed up here. So we'd be looking for a move down, and you can imagine the sell-off coming into the UK referendum as well. You know, there will be a lot of people playing it safe rather than being sorry, so to speak. So yeah, the FTSE's got 5 waves up here. I might just go back to the S&P 500. So the S&P 500 is the 4-hour chart here. We're also looking, like the FTSE, from the wave 2 here. It's a little bit squashed up here, but also we're looking for 5 waves up here as well. We also know that the move up here is in the 61.8, 50, 60% retracement level area here. So between the 61.8% and the closest largest number, obviously attracting the largest orders, would obviously play out as resistance as well. So in a nutshell, even though this is is quite difficult to count here. If we line it up with the FTSE and the DAX, because the DAX has got the same picture as well, but the DAX has also got a nice 5-wave structure here, and we're going to have a look at that in a moment. This is on the 4-hour chart, so we're looking for wave 1 here, an A wave here, a B wave here, a C wave here for wave 2, up for 1 and back for 2 here. As mentioned, this is all a bit squashy here, but if I put it on the 2-hour chart here, obviously it's still squashy, but you know, what we just looked at with the FTSE there, we looked at a really nice 5-wave structure up here. I mean, this 5th wave here hasn't even made a new high here, so I don't know if it's actually even correct to put that there. It's all getting a bit, it also could be like this as well, but I don't think it's like this with another wave structure up here, because the FTSE and the DAX have already done their business, so to speak. So this can become weak from here. I would only go long here if the 2100 here was a tested support, and it's certainly not that. It's still chipping away at supply, at resistance there. And you know, when we look at the DAX, for instance, here on the 2-hour chart, like the FTSE, we can see a nice 1, 2, 3, 4, 5 here. Not a problem. After 5 waves, we have to exit, so we would have been exiting at the 10,000 anyway. But looking for this to complete, and this is more of a short trade here, so we'd expect this to fail and move back into this area here, and you know, make an effort to cover the gap anyway. It'll be on, you know, be an emotional thing that's on traders' minds, and really that's what it's all about. So yeah, look, a nice 5 waves here, nice 5 waves in the FTSE, but when we look at the S&P 500, we just don't get that. We just don't get that nice 5-wave structure here. So we're kind of expecting, you know, the US markets not to do anything really, you know, just to see the outcome of the UK referendum, and that's what's sort of happening. And as mentioned before, we're only interested in really the larger count and not so much the intraday count coming in and through that referendum there. So also too, within this too, obviously one of the most volatile situations is going to be the banks. So starting with money, the cable here as well, the pound dollar here. From this low here, we were looking at 5 waves up as well. In this particular instance, we were looking up here as a wave 4. So all of this is an A and a B and a C rally here, finishing and then making new lows down below the 1.4 here. Now, it's possible to also have wave 5 in play, well, even on this top here. So realistically, a nice clean break, just keep it a little bit lower here, a nice clean break of this here would create the short trade here by the buy, okay? But if it's going to move down from here, it's going to hit the 145, bounce back 40-50%, trying to check this supply level here, and then move down. So don't be quick to grab it, you know, because this can still be part of wave 4 here. I'm not going to get into that at the moment. All I'm doing at the moment is saying, well, the cable's got the same count as the DAX and the FTSE, and every trend's got a beginning, a middle, and an end, and this is certainly at the end here, so we wouldn't see any further upside here as such. I mean, yes, of course, it can move up into this area here before failing here, because the length of wave 3 here has the extension in it, so that means that wave 1 here and wave 5 would basically have the same distance in its wave structure. So we can expect it to move higher, but if it breaks down here, you'll certainly know what's going on, and we'll be expecting it further down here. So the currencies and the banks, so if I go to, say, Barclays, and Lloyd's is much the same as well. Just give me a moment to find that here. So on the Barclays chart here, this is very much like the cable, the pound. So the banks and you know, its currency can basically move together, and that's what we find in Australia as well. The banks pretty much dominate the pattern for the indices. So in this currency in the Barclays here, the move up here has got 5 waves as well up here. Now, this whole particular pattern here counts very nicely as an A and a B and a C for the A wave, sharp B wave, because when you're talking Elliott wave, you know that in a 5-wave structure, if wave 2 is simple, wave 4 will be complex. Okay, so there's a guideline of alternation, and you find that in corrections themselves as well. So if the A wave is complex here, then B wave will be simple, and then the C wave will be simple or more complex. But in this particular pattern here, we know that wave C would have 5 waves in it. So we expect this is the catch-22 here, because we know with the cable we'll be expecting new lows here. With Barclays and the indices, we're expecting further upside, but we're also expecting a pullback in here. So even though I've got this labeled as a bearish pattern, and it's quite a nice bearish pattern, and we just can't ignore it. On the bullish side of things, where we've got the indices, it's a slightly different scenario. We've got this as one here, an A wave here, a B wave here. I'll remove this, and this here. This is wave C here of wave 2 here, and then up for 1 here and back for 2 here. And that count is just as valid. That's what we have on the indices. That's what we have on the DAX and so on. So in both cases, what we can expect in the short term is, and you know, when this started down here, we mentioned buy the rumor and sell the facts. So this is the rumor, and you'd be selling the facts in here. So yeah. Look, if you see Barclays Bank below this 165 level, below the 61.8%, then you know that that we're, you know, it's going to be following the pound down as well, which also drag the indices. So, you know, it's not like we're entering this particular situation with the referendum in a very simple wave count. We've got wave counts that can go either way, and that's the problem with Elliott, and we know that, you know, but sometimes Elliott can be so sort of accurate, but you need to have confidence in that, and when we have that confidence in it, we trade it, you know, and of course we use the trading levels, which is what's on here. The 150 is a medium level, then we've got subgroup 2 here, 65, 72 and 80, and of course a major trading level here. So, you know, we would normally want some support on some large number regarding the trading levels to in line with the Elliott wave to play this out here. So look, anyway, I just thought that I would sort of feedback from the S&P and the NASDAQ and into the European indices and into their banks and currencies, and this is where we sort of stand. In all cases, we would be looking at a retracement here. So just because they're moved up, you always get the opposite of what you're looking at. You know, if you're looking at a trend, then you get the opposite. If you're looking at a correction, then you'll get the trend. And in here so far, we've had a trend that's got the beginning, the middle, and the end, and there will be a correction. So expect it. All right. Thanks for tuning in. Cheers.